Let's go. And let's talk market for a little bit. Interesting week last week, much more interesting than most of what we've seen in May and somewhat April. Quite the volatility, to be honest. We've seen VIX hovering above 20 for a large part of the week before getting crushed. Um, so again, if you take prices over a little bit more than a year, a little bit less than a year, sorry, since October 2025, anytime you see 20, that's going to feel like it's high. But at the same time, considering what has happened over spring, 20 can also feel pretty cheap, and people will still be thinking, okay, is 30 around the corner? We've seen 23 at some point that week. It was an interesting one in the sense that we never really had a strong reason or a strong catalyst for all that volatility, and I think it's a continuation of Friday. Um, I hate saying stuff like this, but yes, there are a few moments in the year where rotation is happening. We are in the week where, you have end of second quarter, end of semester. There's obviously always a little bit of like weird flow happening. Is it related to that? Could be. Obviously, the stuff happening with Trump didn't help. Obviously, the fact that you have the market getting ready for the SpaceX IPO didn't help either. The fact that anticipation around inflation and the next FOMC meeting, the first one for Wash, didn't help either. But it's not like you can really pinpoint to one reason and say, okay, that's the reason why the market is getting a little bit ahead of himself. And we have to follow what the next development of that specific catalyst is going to be. So yeah, like interesting in that sense that it's very different from anything that we've seen really since the beginning of 2026. And sometimes it happens, right? It's a good reminder that the market doesn't always need a reason to be volatile. Sometimes things will move, and when they do move, well, you need to be ready to trade. And in that case, yes, 21, 23. I understand it might have felt a little bit scary and uncomfortable, but we'll see that in a second. Overall, those were really good prices. The even more interesting one was VVIX, and I think VVIX we can pinpoint to the moment when it went really up, to when Trump was getting really aggressive with Iran. Some bombing were happening. And I think, again, I don't want to say it's exactly because of this reason that VVIX went there. Once again, there's a lot of stuff happening at the moment. People switching positions, maybe switching a few puts and then puts in yes and then buying some calls. You can't really tell. But yeah, VVIX back to 110 at some point. That was at the moment when the bombing in Iran was happening, when Trump was tweeting some pretty extreme stuff regarding what he could do with Iran. And then the minute he said that in the end that's not going to happen, the prices went down and we ended up closing to 93, I think, for the week in VVIX. So I've had a few questions in my DMs about like, okay, is it, you talked a few weeks back about VVIX change of regime. Is it still the case? If you ask me, it's actually a proof that this is the case. Um, for us not to change regime, I would have said, okay, we need to stabilize really around that average for VVIX when the market is not really sure, and that is usually at 100, right? We went into the weekend fairly below 100, much closer to the second average in VVIX, the long term. Basically, you have two, we can't see it properly into that chart, but you really have two modes into VVIX. You have one where the average is roughly below 90 or around 90, but below 90, and then you have another one where it's around 100. It's been 2, 3 weeks where big contrast with what we've seen over a year, and it's spending a lot more time here, which to me signals that the market is getting ready to move on and cautiously at least getting to move on and ready for 6 months where it's probably a little bit less concerned than what it has been the months before. So I understand that it's a bit of a paradox because you see a lot of realized volatility coming back into the market. You can't exactly see and explain why. At the same time, you see those indexes, VVIX and VIX, wilding back to some levels where it feels like there is something imminent, but at the same time, maybe there isn't. So yeah, a bit of a weird week. And again, so we can look at it from a VIX perspective, but if you look at it from a realized vol perspective, that's also the case. So that's realized vol measured over the last 7 days, so literally 1 week. And on Friday, we did realize over the previous 5 sessions, therefore, plus the weekend and overnight, 22. So is this a lot, right? That's always the question you need to ask yourself when it comes to realized volatility and also the difference with what you have potentially sold in implied. It's clearly a lot. If you look at weekly realized vol over the last 2 years and a half, you put aside the obvious shocks. That's Liberation Day. That's obvious, but when it happened, it wasn't really obvious. That's August 2024. You put these two aside, and you are amongst the most volatile week we've seen over the last 2.5 years. So if it felt uncomfortable, I saw in the Discord some people saying like, "Oh yeah, that one definitely hit," and I think that was on Tuesday. If we look at actually just one day realized vol, right, how much the market did move on one day specifically, and we look at last week trying to get a better view. Um, yeah, so that was Tuesday 9th. It felt like Iran again, right? Very similar type of session. Same for the rest of the week. Felt pretty shaky. Much shakier than the Friday, right, where we lost 3%, but overall market didn't move that much. At that time, I was saying like, yeah, we need to see if continuation happens the week after. The Monday was pretty quiet, but then yeah, Tuesday, Wednesday, and then up until then, we haven't gone back to level where I'm like, okay, maybe the worst is behind us. I suspect that, or at least what I want to see at that stage is what happens after FOMC. Does people stay agitated? It's also an interesting one because you have FOMC and then you have quarterly, um, the big quarterly expiry of June. I think this one matters. You always want to pay a little bit attention to that one. Friday is a day off. So it's like you don't always need a reason. You just need to know and accept that like yeah, markets are probably going to be moving again over the next 4 days. If you felt relief after what happens on Friday when the market recovered, that's great. But really what you want to ask yourself is when I withstand another week where maybe we stay around here, right? If volatility clusters, last Sunday I said, okay, it's here. I want to see it keep coming up to start respecting those move a little bit more. That's what happened. Now it's the opposite. You need to wait for realized vol to actually come back down to some reasonable level to start thinking maybe the worst is behind us. And right now you don't see those levels. The catalysts in front of you are quite heavy once again. If you feel uncomfortable with some of the risk you have in the book, you have to find ways to hedge it. So how do you do that? Always the same way. If you ask me, you go, well, first of all, you try to avoid being here. And I think if you've been here the last few, I mean, definitely last week and the week before that, you probably got a few problems with gamma and all the moves. And I know some people, you manage to buy the lows and you always have those amazing stories. Great. If overall you were selling vol in those DTEs last week, you probably lost money by the look of things. Is this going to continue next week? Most likely, yes. Again, if you make the assumption that volatility clusters and what you saw over the last week, over the last few days, is going to continue over the next few days. And once again, the catalysts are there. You may want to be careful if you're in 0 to 70 Ts. And then otherwise, like, yeah, if you have stuff expiring, let's say from 2 weeks, you're uncomfortable with it. Well, first of all, you can maybe just take it off, especially if you're profitable. Or otherwise, you want to get into days where you can give a lot of breathing room to your straddles. And here, let's be very data driven again, not to sound like anyone else. It's not so much that you roll back down in time, it's you roll back down in time where, once again, you have some VRP here. We'll look into Uzo in a second. Uzo start to be interesting in the sense that you see a lot of realized volatility still. It's still a headline market, but implied doesn't pay that well. We'll see that. We'll see that in a second, and that's a big contrast with SPY. So yeah, if you're around here, VRP is not great. Probabilities were great at some point this week. After Friday crush, they're not amazing. It's fine to take what you have here and come back in zones where, yeah, you have 6 points right now. Market might move over the next 1, 2 weeks up until the end of the month. It's most likely going to be a little bit more quiet in July. And then at that stage, VRP should pay off, right? So better safe than sorry. If you have stuff in the shorter expiries, try to push them out. You also don't need to push them out just right now. It's fine to take something off and then wait for implied to go back up 1, 2, 3 points. So this is vol of vol, same idea, but for volatility itself. It's back to mid-range, right? Something where, yeah, 3 points of implied vol within a day is not shouldn't come as a surprise. So we're roughly at 17 something right now, 18, let's say. If Tuesday before FOMC, everybody scramble for hedge because they don't know what Harsh is going to say, and you have a few leaks in Wall Street Journal about what he might say, what the Fed might not do, and hedges start to be a bit expensive. You see 21. It's going to feel scary, obviously, but yeah, that might be a better situation to again consider those two zones from 1 month out, the classic, to even further, maybe somewhere in like yeah, end of July. Problem is after that it's very far. It's month of August. It's very far, but like I think you have in ES at least you have July 31st that you can target right now, which is somewhat this one. And yeah, if you're probably not going to see 3 points more of implied vol on that one, but yeah, if you see VIX 21, try to jump on it. There is one last thing I wanted to show. Spend a little bit more time on Realize this week, uh, because I often say this that Realize doesn't move that much, or it takes something important for it to move almost vertically like this, from 10 early in the month to almost 15 at the moment, 14. So basically 4 points of realized vol in 10 days. Yeah, you look at the graph of 2.5 years, it happens once, obviously. That one does count, but even that, it was a little bit smoother. Another time here, another time there before Liberation Day, another time here, another time here, another time here. My point is that's less than 10 times in 2.5 years, and I'm sure we were explaining it a little bit longer. We would see that that number doesn't go up that much. Essentially, my point is when you see implied going up widely in a day, it's unlikely that Realize is going to catch up straight away. It's going to feel scary, and obviously you will want as a VRP seller to understand, okay, how is Realize vol behaving and how is the forecast looking like right now? And we're actually working on tools that that helps to see, okay, based on what's happening in the marketplace right now, this is the new forecast for realized volatility that I think will help to not only demystify how realized vol moves, but also give confidence into what's likely to happen in the future. But if you don't have tools like this, if you see 3 points VIX up and you know that your term structure already looks like this, the odds are basically even more on your side. Obviously, make sure that, I don't know, there's not an actual war happening or a piece of information that is widely different from anything that we've heard over the last 2, 3 months. So, for instance, let's take a concrete example. Trump talking about bombing Iran again. Obviously, that was new, but it wasn't necessarily super new either. It would have just mean, and if it happens, it just means a little bit of the continuation back and forth that we have over the last 3 months, with obviously some missile exchange. Uh, but like it's not like the market's going to be heavily surprised by these kind of things, and therefore it's unlikely that you will see price violently react, or at least you will need something really terrible happening to see price violently react on a piece of information related to Iran. So yeah, something new happening, markets react. Yeah, sure, you want to take the time to digest what exactly is going on. Otherwise, yeah, the level is high enough. We might see 21 at some point this week, even before FOMC, probably after FOMC, when the markets start to digest and people start maybe selling stocks. I have no idea. I don't have strong views on directions, except that stock goes up most of the time. Um, yeah, like if you see 21, think about this, and you probably want to do something about it. Why the confidence if we put macro aside and the overall catalyst landscape? You look at again at the different term structures. Let's start with the spot term structure, and let's start with the 20 delta puts that we derive basically from the vol surface, right? We recompute our own vol surfaces based on the price in the market. That's a fairly healthy contango, however you want to look at it. Once again, a little bit of distortion as usual in the super short DTs. That's not abnormal. You often have a little bit of distortion here precisely because you have a ton of volume. Implied volatility is nothing else than supply and demand. You have a lot of demand here. You have a lot of volume here in the shorter tenors. So you often have a little bit, a very tiny bit of backwardation between 0 and 7 days before seeing, yeah, once again, what I consider a pretty healthy contango. When you go from 12 to something like 24, that's not 12, sorry. That's 17 on the 20 delta put to 24 a year later. That's a healthy contango. There's nothing to think about. And when the market is in contango, usually um, usually it means that it's not too scared about what's about to happen. Same ideas with forward vol. So forward vol helps you understand, are there particular region in the term structure, or more specifically in the calendar, that the market may be looking at and thinking like maybe this region is more scary than another. And here, once again, pretty healthy contango where basically the market says, let's see what happened very far in time. Something can happen over the next 6 months, but nothing that we don't have some sort of an understanding at that moment. Again, it will have to be something that is not Iran, that is not AI, or a dramatic acceleration of those narratives that takes people on the back foot, because otherwise we kind of know where the risks are these days. Um, so what do we do? How do we trade that stuff? Like, yeah, exactly what I was just saying, and you see it really well with the vol surface here. Uh, be very mindful if you come here. There's negative VRP pretty much everywhere. Be very mindful if you sell calls. the market has been pretty shaky. It's not as bad as it was Wednesday, Tuesday, last week, where the calls were really cheap and then obviously bounced back up. Um, and yeah, if you come around here, as we were discussing a little bit earlier, 7 points VRP, 42 days out. Yeah, like just I think it's fine to be setting those, giving yourself a month and a half, and then coming back and see what exactly has been happening and probably collect a few dollars. Let's talk a little bit about Uzo, which is pretty much a different story now than what's happening in VRP. So let's start with this one, which is the relationship between the VIX for Uzo, so implied volatility for Uzo. It's not the at the money volatility for Uzo, it's literally the VIX for Uzo. We do recompute those things ourselves with all the option chain to get a precise number. And for the longest time, you had a pretty, I mean, longest part of the year, you had a pretty strong and decent VRP in Uzo. I was banking on the fact that that VRP would stay sticky for a bit, but since end of May and early June, it has virtually disappeared, right? A lot of people are selling option now in Uzo. And here, let's be precise, right? Like when people hear people are selling options, we always think people sell option from a speculative perspective. But remember, especially in the case of Uzo and oil, one of the big supply that probably has hit the market over the last 2 weeks are people that were hedged on the oil market now get rid of their hedges, but so that obviously create a lot of pressure on prices, so implied volatility goes down. But in the meantime, the headline market hasn't gone anywhere. So realized vol stays quite elevated. The demand for option is basically diminishing. So your VRP is virtually zero at the moment. I alert on this because, yeah, like again, it's no surprise that I don't even hide myself that I used to have pretty big position in oil selling options. When I see stuff like that, I'm like, yeah, you probably want to be a little bit careful and maybe take a little bit of risk off the table. Those curves, those term structures don't look healthy at all, if you ask me. The typical structure we had up until a month ago was a lot of VRP really in the first few weeks because again it's a headline dominated market, so the market was ready to pay extra money for Gamma more than Vega because that's really what impacts the option price, but also the reaction of the underlying itself, right? When you have realized volatility at 60, once again, the biggest problem is not so much, obviously it moves intraday, but really it moves on big news that can happen overnight, even throughout the session. It takes 4 or 5%. And that's pretty much how volatility is being realized in Uzo at the moment. It's pretty quiet, and then all of a sudden you have a big backup or a big gap down, and those options tends to, when you have a market like this, they tend to be more expensive to compensate for that risk. That's not necessarily the case anymore. Again, if you've been trading it, and I know in the group some of you've been trading it consistently, yeah, you want to be a bit mindful. I don't think this is healthy at all to consider being as invested in that trade as we were a few weeks back, up until a month back, really. I think a month back it was still fairly reasonable. Now the way I'm looking at it, I'm like, yeah, no, probably not. Do I think it's going to come back? Probably. What we want to see is some sort of resolution that will finally drive that realized volatility down. But because it's typical, right? Like you have some sort of resolution, market stop moving, but people are still a bit burned, and then imply stays elevated for a while, and you have a nice VRP that you can exploit for quite a while. But that's not what we've observed, particularly the last few weeks. If we go back to earlier in the year, yeah, so obviously pre-war and during the war, you had some VRP. It was probably a little bit harder to make money in March for obvious reasons. That's 2 weeks out, by the way. It was still okay-ish, but really here it's not great. So just be mindful of that. Um, and hopefully at some point it goes back. Maybe we're probably not gonna have 30 point of implied over realize at 14 days in Uzo anytime soon. But yeah, like a much healthier 6, 7, 8 to 10 points, we can totally work with that. Like early in the year, that's um that's enough to start extracting stuff on a fairly regular basis. And I'll finish with this chart again because when you have VRP that can stay in a product for the longest time ever, and in that case, that's what has been happening in the SPY since Liberation Day, right? You have market that is scared of that moment where Trump can say something that really take people off guard. People are hedged. They are much more hedged than they were before before Liberation Day, right? If you look at it, it's pretty obvious, right? Like I'm not saying you didn't have VRP, but it's been pretty fat and consistent since Liberation Days with a few episodes of a little bit flattish contracted VRP. But when you have stuff like this, it's fantastic because you have a natural reason where people are overpaying for those options. They have to, right? They have mandate. They can't go unhedged. They can't go without risk being under control. It doesn't mean that the risk, the price of insurance is high for no reason. That's on you, then insurance seller, option seller, to make sure that your risk is in check. But then this kind of period leads to this kind of result, right? So anyone that says, "Oh, VRP is an illusion, it's not paying," I don't disagree with the fact that it's not always there, right? You have moments where it's going to disappear. Your goal is to make sure that you're not in the market and you don't try to harvest VRP for weeks when clearly it's not around. You probably want to chase another product or do something else. But in the case of SPY, that stuff has been glorious for more than a year. Hopefully, with what happened last week, people are going to be burned again, and then we'll still see 5, 6, 7 point consistently. And then that means that you can just keep selling over and over and over again. And hopefully we'll be able to say something similar with Uzo, but right now it's not exactly similar as we were saying a little bit before. It's much better overall than what it was here, again, for obvious reasons. But if you go in a very short DTs, this is 28, right? So a bit different from what I was showing before. It's not as great as what it used to be. So be a bit careful with Uzo. If you guys have questions, I'm happy to answer. Cool. If there's no question, then I see you all in the Discord and have a good week, everyone. See you.
Thanks, Alex. Bye.
Bye,
See you,
guys.
Lauren. See you. Bye.